With the market so volatile, some people have put their investments into cash and are waiting the market out. And we have with us today Jonathan McCoy of Market Advisory Group about what signs maybe those investors are looking for to get back in the market. So what do you think some of those folks are looking for? What are some signs maybe they could be looking at to encourage them to get back into the market?
Well, I mean, we all know that timing the market doesn't work. I mean, 99% of the time you're going to be wrong, and that can leave you holding the bag as far as from a retirement planning standpoint. So what a lot of folks are concerned with is if you are sitting in cash, that money's not doing anything for you right now, especially if you're making income withdrawals. That can be a big time long-term risk to your portfolio. So timing the market we don't recommend, but what we've been working with our clients is looking at investment opportunities that can take advantage of both up and down markets, because it's really a coin flip. You look at the next at least 12 months, we have no idea where the market's going to be in a year. So positioning your money to where if the market does continue to drop, you're not going to lose much value, if not guaranteed to not lose any value. But if the market does start to rebound, you're in a position to participate in as much of that return as possible. So taking advantage of both possible outcomes is really what we're focusing on.
And then with market tax services, is there still time this year to make adjustments and tax adjustments to try to mitigate tax burdens when it comes to filing time next year?
Yeah, absolutely. So this is the time of the year where we're getting together with all of our clients and even folks that are not working with us, looking at a plan, a strategy for how can you be moving money around into maybe tax-free investments, paying some of the taxes as you go earlier than otherwise necessary. In other words, before required minimum distributions and things kick in. This is the time of the year that you need to be meeting with a tax advisor. With Market Tax Services, we bring our team of CPAs beside us to make sure that we've got that professional advice to look at how much money does it make sense to pay taxes on now, how much adjustment needs to be made there. But this is the time to be doing that.
Yeah. And this next question, I always hear ads on the radio, it seems like, about metal investment, like, silver, gold.
Precious
It's kind
metals,
of thought
yeah.
about old school, What alternatives are there to people who maybe have significant amounts of precious metals in their investment portfolio, or maybe they're looking to get rid of it and maybe come back to something a little bit more middle of the road, so to speak?
Yeah, so there are lots and lots of alternatives. Won't get into too much detail today. Precious metals have been one of the most volatile asset classes, especially this year.
Yeah.
And it seems like almost all asset classes have been losing value as interest rates go up. So we understand that there are some long-term risks there. If you'd invested in something like in precious metals back in 2011, as of today, over the last 11 years, you're looking at about a 6-7% loss. So if you think of that as a long-term stability feature of your portfolio, you might be barking up the wrong tree.
So that silver I was thinking about buying back in '08 or whenever it was.
It's going to be as all over the place as anything else, yeah.
All right, well, next up we do have a viewer question. This is from Curtis. Curtis asks, how do I turn a commercial building I own into retirement income? I can think of several different scenarios for this, but what is the answer that you had for Curtis?
Yeah, so I've worked with several folks that have owned commercial properties over the years, and some of those people are digging out of bankruptcy from 2008. I mean, you can wind yourself up in a lot of hot water, especially if you're retiring. You're not going to be putting as much of your time into the maintenance and management of those types of properties. Shifting those assets into other types of retirement investments to deliver an income stream is really the main focus, right? How much money do you need hitting your bank account on a regular basis? And if you wind up with a vacant property that's not paying you the income you originally counted on, especially in the work-from-home world that we're in now, those can be incredibly high-risk asset classes, especially as the real estate market continues to slow down. Talk with people in the commercial real estate market all the time that are talking about, we're starting to see pullbacks in cash flow, high vacancies. You have to recognize the risks first before you can address where can the value of that asset be shifted to make sure that you've got that long-term income.
But given the real estate market now, and commercial real estate especially, even if it might be slowing down, is valuation still high now than it was, 4 or 5 years ago? So they still got to have a little bit of money in that valuation, though, right?
Now's a really great time to be looking at capturing some of that gain, the growth in the value of that asset that we've seen over the last 3 to 5 years, and locking it into something that can be much more stable and consistent with some more guarantees on that income.
All right, Jonathan McCoy, thank you very much for your time this morning. We do appreciate you, and you can schedule a complimentary consultation and submit your questions by visiting AskOurAdvisor.com or by calling 816-548-2000. They'll take your questions and even meet with you one-on-one free of charge. If you include your address, Market Advisory Group will send you a free gift.